Facebook and Twitter I put out to just simply send me your real estate question to see if we get them answered for you. And then I didn't turn the coffee on in the office, and I ran around and saying that there will only be coffee in the office after this session is done. And so this is what you get when you shut the coffee off. So they promise to help us get through this. Now, I did get a lot of questions, so we had to whittle some of them down. We can continue doing these videos, but today I just wanted to get back and get started. And first of all, let me do some introductions. Sturai, you want to go first?
Sure. I'm Sturai.
Yusufi?
Yusufi, yes. And I mainly focus on commercial retail and offices for leasing as well as asset sales.
I'm Adam Zornigan. I focus mostly on industrial and retail sales, leasing, things of that nature. And
You both have a focus on Los Angeles or nationwide?
Los Angeles, as well as Southern California, and then a few cities that have a little bit more action going on throughout the country.
Okay. George Pino, I focus on real estate investment throughout the nation, actually. A lot of single-tenant, triple-net investment class assets, as well as multifamily investments within the Los Angeles and Southern California marketplace.
Very good. Okay, we're going to jump right in. First one is from ANNAHM55, and she asked, what steps did you take in developing a marketing plan to sell a home? We're typically commercial, but we're very lucky that Adam has some experience in residential real estate. Adam, do you have what kind of marketing plan to sell a home?
Of course, first and foremost, you want to start off by understanding your seller's expectations.
Yep.
And how you want to go about meeting them. Once you have, obviously, a price in hand and a time frame is how long you want to go about disposing of the property. You want to get your self-materials ready to go, some nice photos, some nice flyers, brochures, things of that nature. Residential is a lot more specialized and niche in terms of what neighborhood you're dealing with, and each home has its own story, so to speak. You want to be able to really capture the essence of what that home is offering to the potential new buyer, family that will be living in it, and knowing what makes that spot unique. So, for instance, if you're in Hancock Park or Koreatown, you're going to see a lot of craftsman-style homes. When you do a little bit of research, you're going to find that a lot of them have features and specific build-outs that are harking back to an era in the 40s and the 50s and the 60s that someone who's an expert will come and say, I know the designer of that, I know the manufacturer of this. And those things matter to the home buyer that is going to be purchasing within the neighborhood. After that, I would say getting to know the neighborhood, especially because you'd be surprised at how much neighbors know about what's going on around them. And in this moment, you definitely want to be on a good page, on the same page with them, inviting them to the open house, having them come see the property because they're going to be one of your biggest assets in being able to disseminate the information, because at that point, you need to get to choose your neighbors.
Yeah, that's exactly it, because if I'm a neighbor, I can choose who I want to be living next door to me.
Absolutely.
Yeah.
And beyond that, you obviously, as any real estate agent in any sector does, a lot of attention to detail, staying on top of your clients, doing a lot of follow-ups, but definitely it's much more localized. So getting in with neighbors.
You know, there's over the years, I mean, of the recent years, social networks. Have you seen a big change, or do you know that there's been a big change with marketing on social for residential real estate?
I think there has, especially with, I would liken it to what Food did with the Food Network,
right,
where HGTV made the average home buyer and consumer a lot more savvy, whether that's with the types of materials that are going into the homes, design features, things of that nature. So a lot of people are gravitating towards not just marketing the opportunity is the investment of the home, but what has always been residential, which is an experience.
Right.
And people are a lot more willing to have that conversation and understand what they're being presented. So you'll see a lot of beautiful interior design features and links to designers and things of that nature on social that kind of help reinforce each other's businesses.
Mm-hmm. So that can really enhance your marketing. So, great tips. Thank you. All right. Next question. Mark _, I'm going to ruin this last name probably. Fuchs, I guess, maybe.
Looks like
asks, is there a limit to a 1031 exchange? And how do the taxes get paid or carried forward when you make an exchange? Who wants to tackle that one?
Okay, I'll jump in it because I actually work with a lot of 1031 exchange clients. And Mark, appreciate the trick question. So, as far as the limit to 1031 exchanges, no, there are no limits to it. There are guidelines as far as what we call the in a 1031. There's what we call the down leg and then what we call the up leg. The down leg would be the property that you're selling, and the up leg would be the property that you're exchanging it for, or like for like, or a type of exchange. Now, the general rules are that it needs to be essentially the same price or more, and you have to replace the same debt or more. So you really can't have any cash that comes out. So as long as you do that, there are no taxes paid, and your basis from the original property gets moved to the new property. You can actually increase the basis if you increase the purchase price a little bit more as well. So you can either do that by putting in more money or putting in more, getting a higher debt or a bigger loan. Okay. So ultimately, as long as you don't take any money, you work with a accommodator so that none of the money ever touches your hands, or even your bank account. Then you don't have to worry about paying the taxes, and essentially they get pushed forward, or it's a tax-deferred exchange, more commonly known as the 1031, which is the IRS code section.
Can you walk us through the time frames of a 1031 exchange quickly?
Absolutely. Pretty simple. What you have to remember is that as of the day of the close, you have 45 days to identify a property or several properties. Generally, most people will identify 1 to 3 properties, and there are a couple reasons for that. And then you have 180 days to close escrow. That's 180 days actually from the date that you sold your property, not 180 days from the 45th day. So all in, you have a total of 180 days. The other time frame you have to worry about is that 45 day.
Okay.
If you do identify more than 3 properties, you have to be careful because they can't total more than 200% of the total value of the property that you sold, and more importantly, you have to buy off all the properties, or otherwise your 1031 exchange is completely void. So most people only identify up to 1 to 3, which is why absolutely I would suggest make sure that you hire a professional that is very familiar with 1031 exchanges, has done them, has seen most instances of that, and that's both with the accommodator that you're using as well as any agent that you decide to help you.
Okay. All right. Next question. Investor17_ West LA. As a new investor, how do I minimize the risk inherent in investment, and what are some unknown risks or liabilities involved in investment that I may or may not have thought of? That's a tongue twister, I guess. All right. Who wants to tackle that one?
I think that might be kind of a group tackle. I think initial steps is really keeping yourself informed and starting off with asset types or areas of the sector that is of interest to you. So if you're a person that enjoys aspects of retail, looking at that market, reading up regularly on news and the process of it. So kind of self-educating yourself, because there's so many amazing resources out there in terms of investors that are involved. You do kind of have to go through quite a bit. And then I feel like it never hurts to pick up a phone and speak to several professionals that are in the industry. So if you are looking at commercial type of properties, getting in touch with other commercial real estate agents, other investors, and kind of creating a dialogue and getting information in addition to your own online research that you're doing. So I think that's sometimes a good starting point.
Also, what I tell a lot of my clients, so when we're talking about investments, because all investments are, inherently have risk, and to mitigate that risk, I always tell them really look to what your investment goals are, what you're trying to accomplish. Don't ever, early in my career, I was told that there are speculators, there are investors. Investors expect a return, speculators hope for a return. So really, if you're going to expect the return, then you should have the knowledge and understanding of why you expect that return by doing your investigations. I myself recommend most of my investors, almost all of them, to only buy for cash flow. That should be first and foremost. Make sure the property cash flows, because that's where a lot of, especially first-time investors, get stuck. And they buy hoping for the appreciation, that they're going to end up flipping it. They're going to be able to carry a negative for a few months or something, and then the market changes. And now they're left with a property they can't sell, or they're going to sell at a loss. So as long as it cash flows, it doesn't matter if the market changes or not, because ultimately, it's carrying the debt, you're cash flowing, and you can wait for that market to come back up. And, it is cyclical. Markets do change. They go up, they go down. And as long as you're prepared for it and you understand what's happening in that marketplace, then you're really mitigating your risks there. So that's what I would recommend.
Yeah, just to add on, liking to what they were mentioning, definitely having a more conservative approach, I would say, would benefit a first-time investor, and always in any investment, whether it's real estate and stocks, you name it, being familiar with the product that you're investing in, because that will keep you from being undercut and not understanding how to navigate the waters when things do become a little more difficult.
Yeah, know your market. Don't be too anxious. I see a lot of beginning investors really when they want to buy that first property so bad that they overpay, and so it's gets you in trouble very quickly. Okay, next question. At I guess Debbie Blonde, and she said, or he or she asked, I want to invest, but I don't have millions of dollars. How do I get started? That's a very good question, actually. So, who's got?
Well,
you again?
I'll jump in, I guess. But unless someone wants to throw it.
Okay.
There's what you can do. There's actually a couple things that you can look into and take a look at. If you just want to put your money in real estate, you can look at REITs, which are publicly traded. You're buying stock essentially into the company. If you want something with a little bit more where you're choosing the actual investment or having some say in it, at least as far as the type of investment, maybe look for syndications where you can go in with a little bit lower amount of money. Sometimes anywhere I've seen them as low as $20,000 minimum buy-ins to $100,000 minimum buy-ins, and you can buy in as whatever you feel like. Lastly, look at partnerships.
Friends and family.
Right. Things like that. That being said, if you do consider a partnership, or if you're looking for a partnership, make sure that you also look to the negatives. Everyone's all excited about a partnership when they're investing in a property, but things change. Life happens, and your partner may need to sell. So what do? You want to plan everything out. What is the exit strategy? What's going to happen down the road? How long are you planning on holding the property? And those need to all align, or you have to be able to have some sort of buy-sell agreement that's created for that. And that's really getting involved with some attorneys and make sure that it's all set up and done.
Well, there's a pretty good cost to really set something like that. If you're going to do friends and family, you're going to have to do all this paperwork to set your syndication up. You're going to have your PPM and all that. And that can get, what, $15,000, $20,000 maybe?
Well, if you're doing the syndicating, $15,000, $20,000, if you're actually just one of the investors coming in, there's really not much of a cost for you at all.
Right.
All the
legal
work's done. If you're going to create a partnership with like a couple family members or friends, then you're not really doing a syndication so much as a partnership. And really what you're looking at is probably the cost to create the entity as well as the cost for the buy-sell agreements. And you're probably looking $5,000 to $10,000.
Yeah, and I think like anything else, keeping really clear lines of communication in terms of if different scenarios come up, how would you guys like to handle it? And I think it's sometimes great to work within your network, within your group, and the whole concept of the power of your wallet and where you spend the money. I feel like that also comes into play when it comes to investing. You do get a choice as to who you're partnering up with, which demographics, which groups of people are you helping empower by you partnering up with them and basically working towards an improvement. So there's a lot of good that can come out of a situation like that, but I think having clear lines of communication and expressing with a lot of transparency on how you guys are going to handle different situation, it helps kind of resolve a lot of possible issues. And I think they're great questions that you guys, even if you don't know what questions to consider, there's a lot of, again, awesome resources online, just even if it's a list of questions that you guys can go through and be like, okay, how are we going to handle these different scenarios and get that dialogue going? That's a really great starting point as well.
You know, even if you do invest in a real estate investment trust, you want to know the asset class you want to invest in, because there's real estate investment trusts for most asset classes. And so know what you really want to focus on and really do your due diligence on the management team. So it can be a great way to learn by starting, you know, a little less risk. So, all right, next question. Looks like Cerise Griffith asked, how can I find a good investment?
Well, a great way to start would be maybe finding a commercial real estate agent. That's a great place to start. We not just only have offerings of what we deal with in our office, but as agents, we network with tens of thousands of agents locally and nationally that we're always sharing opportunities and what is happening in the market in different regions. I think that's a wonderful place to start. You can do your own research online, obviously, as well. The internet has empowered a lot of people to be able to go and explore on their own and figure out what they may want to get involved in. The articles that we read are, a lot of them are available to the average consumer as well. You can find out trends in retail and office space and the industrial market and multifamily, see where things are headed, how they may relate to your business and how you'd like to be involved in it, and if it's an opportunity you can jump in, whether it's this year, next year, or long, short term.
Yeah, and I think with good investment, how I define a good investment would probably be very different from the way someone else defines it. So to go back to something George said earlier, being clear about your objective and what outcome you want to come out of your investment, your goals for the investment. Once you're clear about that, then you can better define what is a good investment for you. Because if something is, let's say, of high risk and someone is being conservative with that or wants to be conservative, something of a higher risk might not be a good investment, whereas someone that is open to that risk and wants that greater return, that could easily be a good investment. So staying clear on your goals for it helps define the parameters of what is good for you.
Yep, absolutely. You know, the only thing I maybe would clarify a little bit, because I think Adam hit the nail right on the head, is find a professional that can help you. That's going to be,
Yes.
you know, a commercial real estate agent, or that's probably one of your best choices. But also, don't just go to the listing agent. Find an agent that really helps buyers with their investments, because they're going to be able to bring to you multiple properties, not just from their own company, but also throughout the whether on the national network or the local network, and they're going to have your best interests in mind. They're going to advocate on your behalf, as opposed to having a selling agent sell one of their properties and to you that really they're just trying to sell the property.
Absolutely.
Yeah, and a buyer agent that is exclusively representing you, they have a fiduciary duty to serve you and keep your interest in mind, and they're going to be, like George said, looking at the entire market and providing you options versus just the ones that are, you know, within their own listing network.
The last one, Three Pedal Pusher asked, in this market, what kind of property should I be looking for?
Ooh, that's a good one.
That's a good one.
I like that.
Wow, I guess, I don't know what area this individual's in, so it's really area sensitive, but
I think that this is similar to the question of what, if I'm a first-time investor, what should I invest in?
Yeah.
There's a lot of similar characteristics in that, especially if we're looking at it on a more general basis. But if we're going to look at, just say, for instance, the LA market, for me personally, I've been going through with what a lot of my buyers have been wanting recently, and that has been industrial, for instance. Yeah. There's been a lot of movement towards that, and I think that you can't just look at industrial as its own sector. It's a consequence of downtrend in retail, actually, a lot of it, where you see a lot of traditional businesses switching their format and going online mostly, and needing the space in warehouses and manufacturing areas to be able to distribute their products from, and not necessarily needing that space in there as well. So thus you'll have retail prices going down and industrial going up. So if you want a little bit of upside to catch that upturn, you may be able to catch the industrial trend going up a little bit before it hits its peak, and then you might be able to find retail property, for instance, on its low end that you may be able to realize profit, down the line on a long-term investment, 5-7 years down the line.
And I think a lot of this comes back to, your risk. How much risk do you want? If you want very little or less risk, triple net product, or
Yeah, absolutely. It goes down to ultimately it boils down to the goals. What do they want? What do they want to accomplish? Are they looking for very high returns in a short period of time, which is going to be very high in risk, or do they want stabilized assets, asset preservation with a stabilized cash flow? There's different types of properties. I think in most asset classes you could probably find an opportunity there. I would probably also look at and really rely on the economic forecasts. Take a look at both the macro and microeconomics of what's happening within the industry, and then base a lot of your investment decisions on some very firm and strong economic decisions. Because if you see things in a growth pattern, there's ways to vet out and take a look at the property area, how it's doing, what it's happening, what are the growth expectations, how's the demographics compared to the average demographics for the region, is it income levels, are they higher, 120% higher, 130% higher than average, and what expectations for growth for the area, or is it infill neighborhood? So those all really have to be taken into consideration. And depending on what you're trying to accomplish, I think you can probably find an opportunity in almost any asset class.
Okay. Yeah. And also, I think this kind of goes back to the one above, find a good commercial real estate agent.
Yes.
So, I'm in a room full of commercial real estate agents. All right, thank you very much for your questions. I didn't want to take this too much time today, so we will do this again. If you want to continue sending your questions, we'll re-huddle up and get everything answered for you. I'm going to put Adam's, George's, and Sturai's contact information on the video. And thank you for tuning in, and please subscribe. Thank you.
Thank you.
Thank you.